you are seeing my videos and you are getting benefited out of it. In my last video, if you remember, we had talked about the preparation of the capital account and the current account and had told you that we will continue with the preparation of the capital account and current account. Today, I will solve a sum in which we will calculate interest on all, that is the capital account, current account and on drawings. Now let us read the question. In this question, we have taken three partners, Alex, Brett and Kathy, and the partners' capital balance and current balance are provided to us. The capital balance of Alex is 1,20,000, that of Brett is 1 lakh and that of Kathy is 80,000. The current account balance for Alex is 15,000 and Brett and Kathy has balance of 10,000 and 8,000 respectively. These are debit balances and therefore they are shown in brackets. Drawing of the partners were 2,500 per month for Alex, 3,000 per month for Brett and 2,000 per month for Kathy. So here the monthly drawings of all the three partners have been mentioned, but it is not mentioned when the drawing has been made. Next one, Brett has been provided a salary of 15,000 which has been posted to the profit and loss account, after which the net profit is 95,000. This is very important for us to understand this, that the net profit should have been posted to the profit and loss appropriation account. Instead, it has been posted to the profit and loss account, which should be rectified. Therefore, the correct profit which will be posted in the profit and loss appropriation account will be 95,000 plus 15,000, which will be 1,10,000. Now, what does the partnership deed provide? Number one, commission to Brett and Kathy at 10% of the corrected net profit. This is the reason why the word corrected net profit has been used. I have just now explained to you that the corrected net profit will be 1,10,000. However, the commission of Brett is 10% before charging such commission and Kathy is paid the commission after charging such commission. You know how to do the concept of before and after charging such commission, which we'll see when we solve the sum. 17,000 will be transferred to general reserve and interest on capital will be provided at 5%, interest on drawing will be provided at 6% and interest on current account balance will be provided at 10%. This is the first time we are taking a question in which we are charging or allowing interest on the current account. See very carefully, there is one person who has a positive balance in the current account and two people who are having a negative balance on the current account. Therefore, one person will get the interest while two people will have to give the interest. Now, who will be paying the interest? Please see very carefully. Brett and Kathy, they will be paying the interest to the firm, while Alex will get the interest from the firm on their current account balance. Now the question is very clearly stated what the question wants us to prepare. The question wants us to prepare the profit and loss appropriation account and the partner's current account. Here they have not asked to prepare the capital account. If you see my lectures, if you are following my classes, you will see that till now we have done the capital account as well as the current account. But in this question, it is very clearly mentioned that we have to prepare the profit and loss appropriation account and the current account only. We will very shortly solve the sum. After reading the questions, we'll now start with the calculations. If you see the question very carefully, in this question we have three partners, Alex, Brett and Kathy, and the capital account balance is given to us 1,20,000, 1,80,000 and the partnership deed has provided to interest on capital at 5%. Next, we can see the current account balance of Alex, Brett and Kathy. You can see over here 15,000, 10,000 and 8,000, but over here 10,000 and 8,000 has been written in a bracket. That means they are the debit balance. In this case, what will happen is that the Alex will basically get the interest from the firm while Brett and Kathy will have to pay interest to the firm. And next we have the drawings per month given to us. Alex 2,500 per month, Brett 3,000 per month and Kathy 2,000 per month, and we are provided the information: interest on capital 5%, interest on current account 10% and interest on drawing 6% per annum. So let us start with the calculation first. Now first is Alex. See how much is the capital, 1,20,000. This is a mental calculation, need not be done. It will be obviously 6,000, but still I'm showing it to you. 6,000. After Alex, we have Brett. The capital of Brett is 1 lakh. and 5% of 1 lakh is 5,000. Very simple calculation. It can be done mentally. I've already told you that whenever you get a calculation for 5%, 10% or 20%, generally do it mentally. Don't use calculators. It can easily be done. Now the next one we can see is Kathy and 80,000, 5 by 100. That gives us over here 4,000. So it's very carefully see that 6,000, 5,000 and 4,000 are the interest of capital which will be posted in the debit side of the profit and loss appropriation account. We'll soon prepare it after we finish with the calculations. Now next we are going for the current account. What is the interest on current account? 10%. And I'm not going to calculate that. You know how to calculate 10%. We'll just remove one of the zeros. So in this case you can see Alex, the interest on current account will be 1,500. Brett has to pay interest of 1,000 and Kathy has to pay interest of 800. So these two balances will be there in the credit side of profit and loss appropriation. Repeat again. These two amounts will be there in the credit side of the profit and loss appropriation account, and 1,500 will be the debit side of the profit and loss appropriation account. Now after that we'll calculate the interest on drawing now. We'll now calculate interest on drawing at 6% which is provided to us. Let us start with the first partner, Alex. So Alex has drawn how much? 2,500 into 12, that gives you 30,000. 30,000 is the total amount of money drawn by Alex. And since the time is not mentioned when the drawing has been made, we know that we have to calculate the interest for half year. So half year, and what is the rate given to us? 6%. So let us cancel the zeros over here. Let us cancel this and this. We get a 3 over here. So 900 is the interest on drawing for Alex. Now let us see for Brett. Brett has drawn 3,000. That means the total drawing is 36,000 into half year into 6 by 100. Let us see the calculation very carefully over here. So you can see over here it's coming to 1080. How did I get it? 360 into 3 is 1080. And the next one we have Kathy. And the Kathy has actually withdrawn 2,000 per month. That means 24,000 during the year. 24,000 during the year. Half year, because the time is not mentioned. We'll calculate the interest over here. See very carefully. 3 into 240 gives us 720. So over here we have the interest on drawing of the three partners: Alex 900, Brett 1080 and Kathy 720. We have the interest on capital also calculated 6,000, 5,400, and the interest on current account. Alex, the interest on current account will be received, and Brett and Kathy has to pay the interest to the firm. Let us now prepare the profit and loss appropriation account after finishing the calculations. After doing the necessary calculations for interest on capital, interest on current account, and interest on drawing, we'll start off with the preparation of profit and loss appropriation account. You know that the first entry in the profit and loss appropriation account is in the credit side, that is for the profit transferred. Here the profit is given in the question as 95,000, but there's something more given there, that Brett, one of the partners, has been provided a salary of 15,000 and by mistake it has been posted in the profit and loss account. Now, therefore, first and foremost, we have to post the correct profit, which will be 95,000 plus 15,000, which is 1,15,000. That is the first 1,10,000, which is the first entry we should do, and thereafter we should go with the calculations. First, please understand over here, first entry by profit and loss account, net profit transfer 95,000 plus 15,000. This 15,000 was posted by mistake in the debit side of the profit and loss account, which should not be posted over there, because any type of payment made to the partner should be posted in the profit and loss appropriation account. And this 15,000 represents the salary given to one of the partners, Brett. Now over here the amount is 1,10,000. Why is this important to calculate 1,10,000? It is important because it has been said that over here two partners, Brett and Kathy, has been provided commission at the rate of 10%. One is provided commission at the rate of 10%, and another one is provided commission at the rate of 10% after charging such commission. Now let us start with the preparation of the account, taking into account the various calculations which we just now did. So start with the debit side. Over there we write to interest on capital account. There are three partners, if you remember, Alex, Brett and Kathy. And if you remember, we had calculated 6,000, 5,000 and 4,000. So the total interest is coming to 15,000. The next information which we have is salary, and salary is paid to Brett, and that is also 15,000. The next piece of information which the question has given us is the calculation of commission, and commission is paid to Brett and Kathy. Okay, commission is paid to Brett and Kathy. So we'll see what is the commission paid to Brett and Kathy. Very simple calculation. One is given commission before charging such commission. Brett is given commission before charging such commission. So therefore direct calculation, that is 1,10,000 into 10 by 100 gives you over here 11,000. Kathy has been given a commission after charging such commission. Therefore, 1,10,000 into 10 divided by 110. If you remember, whenever we take the after concept, we add the denominator with the percentage. So the percentage is 10%. So now over here, the commission will be 10,000. So as a whole, we have 21,000 over here. Now, if you remember that we had current accounts, and current accounts also were provided interest at the rate of 10%. So first over here, to interest on current account, and Alex 1,500, because Alex has a positive balance of 15,000, while the other two partners have a negative balance of 10,000 and 8,000. Therefore, in the credit side, by interest on current account, Brett and Kathy, how much? Over here, you see very carefully, 1,800. Why? Because the commission was provided at 10% per annum. So therefore, the total comes to 1,800. Now, we also have over here interest on drawings count, three partners, Alex, Brett and Kathy. And if you remember that we had already calculated the interest on drawings, and which was over here 900 for the first partner, 1,080 for the second partner and 720 for the third partner. So 900 for Alex, 1,080 for Brett and 720 for Kathy. The total amount comes to 2,700. So these are the postings which we have now done. Please see very carefully. We have done the posting for the net profit transfer 95,000 plus 15,000, which gives us 1,10,000. We have the interest on current account Brett and Kathy, will pay the interest because they have a negative balance of the current account, and 10% we have done it, so 1,800 respectively. In the debit side, you can see over here interest on capital. We have the salary provided to Brett, this is the salary, and there is a commission which has been given to Brett and Kathy. There's 11,000 and 10,000 because one was provided commission before charging such and the other was provided commission after charging such. Okay, now after that we have also got the interest on current account to Alex 1,500. If you remember, there is one more thing which is given in the question, that is to provide general reserve at 17,000. Okay, the general reserve has to be provided at 17,000. So over here, to general reserve 17,000. Now after that we will compare both the sides and see if it is a profit or if it is a loss. Now if we add this over here, we get a figure of 1,14,500. Total comes to 1,14,500. Now, if the total is 1,14,500, from that if you subtract the figures which is given over here, 15,000, 15,000, 21,000, 1,500 and 17,000. So 1,14,500 minus 1,500 gives us 1,13,000. 1,13,000 minus 30,000, which we have over here, 21,000 and 17,000. All these things if we subtract, we get a figure of 45,000. So therefore there is a profit of 45,000. So to share of profit, and who are the three partners? Alex, Brett and Kathy. And what is the PSR? Is anything said about the PSR? No. That means the PSR will be equal. If the PSR is equal, that means each partner will be getting 15,000 apiece. Therefore, over here, the profit will be transferred to the current account because the capital is fixed. And if you read the question very carefully, the question has asked us to prepare the profit and loss appropriation account which we have just now prepared and the partner's current account which will prepare after the preparation of the profit and loss appropriation account. We will transfer the entries which are there in the debit side to the credit side of the current account and vice versa for the entries which are there in the credit side in the debit side of the current account. After the preparation of the profit and loss appropriation and entering the balances and the interest on the current account, let us now complete the current account. If you see very carefully, I have done the current account and I have already entered the balances of the partners. You can see the first partner, that is Alex, has a positive balance 15,000, that is a credit balance, and we can see over here Brett and Kathy has a balance of 10,000 and 8,000. The partnership deed had already provided that the interest on current account will be 10%, and that is the reason why we can see on 31st/3/2020 the interest is by interest 1,500 and over here to interest 1,800 respectively. Now if you recollect the figures in the profit and loss appropriation account, we had the interest on capital, we had salary to one of the partners, and we had commission to two of the partners. So let us do those entries over here in the credit side, and then we'll come to the drawings and interest on drawings which will be done in the debit side. So sir, let us start with by interest on capital account. Remember, we had 6,000 for the first partner, 5,000 for the second partner, and 4,000 for the third partner. Why? Because if you remember, the capital was at the rate of 5%. We had calculated the interest on capital, and that is the reason 1,20,000 we had 6,000 on 1 lakh, we have 5,000 on 80,000, we have 4,000. That was the capital balance which was given. Now if you recollect, there was basically another item which was the salary. Okay, now salary, who was given the salary over here? The salary was given to Brett. So by salary, Brett was given salary 15,000. Next, if you remember, was commission, and There were two partners who received commission, 11,000 to Brett and 10,000 to Kathy, because one was given commission before charging such commission and other one was given commission after charging such commission. After entering these figures, the next thing which we need to understand, the next entry which had to be entered is the entry for the distribution of the profit, the share of profit. The profit was 45,000 and no PSR was given. That is the reason why the profit was distributed equally among all the three partners, and therefore it was 15,000 and 15,000 and 15,000. So next one is by share of profit. We can also write profit and loss appropriation account, 15,000, 15,000, 15,000. So these are the entries which are there in the credit side of the current account. In this question, we have not been asked to prepare a capital account. Therefore, we have not prepared a capital account. We have directly gone to the preparation of the current account. Now let us concentrate on the debit side of the current account and let us see what are the entries which we'll have. We already have the balance 10,000, 8,000 and the interest on current account 1,800. If you remember, there was drawing. All the three partners have withdrawn money in monthly basis. The first partner, that is Alex, had withdrawn 2,500. Therefore, the total drawing was 30,000. The second partner had actually drawn the amount of 3,000 per month. Therefore, the drawing was 36,000. The third partner had drawn 2,000 per month. That was 24,000. First, let us enter that. So, two drawings. We are not writing any date over here. So, you can see 36,000. Sorry, first partner is 30,000, second partner is 36,000 and the third partner is 24,000. Why? Because this partner, Alex, had drawn 2,500 per month, Brett had drawn 3,000 per month and Kathy had drawn 2,400 per month. Now after that we will write two interest on drawing. And if you remember very carefully, we had already calculated the interest on drawing, which was 900 for the first partner, 1080 for the second partner, and 720 for the third partner. So this concludes the entries which we have to do in the debit side and the credit side. Now you know what is the next step after doing the entries. After doing the entries, we need to do the totaling of it. Then we'll compare the debit side and the credit side, and finally we'll find out the balance. So let us start with the totaling. See, let us leave a line. We don't know if it will be a positive balance or a credit or a negative balance. So we are leaving a line both in the debit side and credit side, and let us see what balance will we have. Now, we see over here 15,000 plus 15,000 is 30,000, 30,000 plus 6,000, 36,000, and we have 37,500. So the total is 37,500. Here also we have 37,500, and you can see very carefully we have a total of 30,900 over here. So we'll have a balance over here. So to balance carried down. What is the date? 31st 3/2020. 37,500 minus 30,000 minus 900 gives us a figure of 6,600. So therefore there is a balance of 6,600 over here. Please be very careful. Now let us see the total of current Brett. You can see over here 36,000 plus 10,000, 46,000 plus 1,000, 47,000 plus 1,080 is 48,080. And I think yes, 48,080, and there is lesser over here because we have only 30 and 41 and 46,000. So this is more. Okay, so you can see over here this side, that is the debit side, is more. We are getting a total of 48,080. 48,080. So we'll have a balance over here. By balance carried down, the date is 31st 3/2020, and you can see over here 48,080 minus 30,000 gives us how much? 18,080. 18,080 minus 11,000 gives us 7,080. 7,080 minus 5,000 gives us 2,080 exactly. So this is 2080 over here, And last partner, let us see over here who has a higher balance. We have over here 24,000 plus 8,000, 32,000 plus 800, 32,800 plus 7p is 33,520. So we have a total of 33,520. I hope you are clear with the total over here, and we can see over here 33,520, and we subtract the figures given over here. 33,520 minus 15,000 minus 10,000, that is 25,000. So we get 8,520 minus 4,000, so that we are getting a balance of 4,520. So here we are getting a balance of 4,520. Now after getting the balance, this is not over yet, you know it. We have to do the next step, that is the transfer step. So we are transferring the balance. The date is 1st of April 2020 by balance brought down for Alex 6,600 positive balance, and on 1st of April 2020 who balance brought down for Brett and Kathy negative balance 2080 and 4520. After doing all these entries, we have concluded with the preparation of the current account. The question had asked us only to prepare the profit and loss appropriation account and current account. Therefore, we have completed the sum. I hope you have understood the calculations over here. This was a sum in which we were asked to calculate commissions before and after charging, which we have already done and posted over here. We were given in this sum the concept of interest on current account. We can see in the first entry we have done interest on current account over here and over here, and as it is the usual things which are always given in the sum. After this sum, in the next video, I will also show you the same current account and capital account preparation. That means the capital account will be fixed. That will be the last sum of this part of the chapter, where I will take more workings and I will take more adjustments. Keep watching. The video will come very soon. Don't miss any of my lectures.